If you're new to Plus500, one of the first questions you might ask is, how does Plus500 actually work? At its core, Plus500 is a CFD trading platform. CFD stands for Contract for Difference. Instead of buying or owning the actual asset, like a stock, a commodity, or a cryptocurrency, you're entering into a contract that tracks its price movement. Your profit or loss comes from the difference between the price when you open the trade and the price when you close it. Here's what that means in practice. Let's say you want to trade Apple shares. On Plus500, you don't own the stock itself. You trade a CFD that mirrors Apple's price. If the price goes up and you open a buy position, you make a profit on the difference. If the price goes down, you take a loss. You can also open sell positions, which means you can profit if the price falls. This flexibility is one of the key features of CFDs. Another big part of how Plus500 works is leverage. Leverage allows you to control a larger position with a smaller amount of capital. For example, with leverage of 1 to 5, a $200 deposit lets you open a $1,000 position. This can amplify profits, but it also increases risks. Losses can add up just as quickly as gains. When you trade, you'll also encounter costs like the spread, which is the difference between the buy and sell price, and overnight funding, which applies if you hold positions past the daily cutoff time. These costs are always shown transparently in the instrument's details section. The platform itself is designed to be straightforward. You can access it on desktop, mobile, or web, browse through instruments like stocks, forex, commodities, ETFs, indices, and cryptos, and place trades with just a few clicks. Plus500 also offers risk management tools such as stop losses, take profits, and guaranteed stops to help you control your exposure. So, to put it simply, Plus500 works by letting you trade CFDs on a wide range of markets. You don't own the assets, you speculate on their price moves, using leverage if you choose, and paying costs like spreads and overnight funding along the way. It's a platform built for accessibility, giving traders the ability to go long or short across global markets from one place. Well, that's all for this video. I hope you found this video helpful. And if you did, make sure you give this video a super thanks by clicking on the heart icon to help support the channel. And don't forget to hit the subscribe button. We'll see you in the next one.